Number 1. Living below their means.
Living below their means that wealthy individuals spend less than what they earn. They consciously avoid excessive spending and prioritize saving and investing their money wisely. Instead of indulging in lavish purchases or unnecessary luxuries, they focus on building financial security and long-term wealth. This habit allows them to allocate a significant portion of their income towards saving and investing. By consistently saving and investing, they benefit from the power of compounding returns, which helps grow their wealth over time. They understand that small, regular contributions can have a significant impact on their financial well-being in the long run. Frugality is a core principle behind living below their means. It involves making deliberate choices about how money is spent, avoiding unnecessary expenses, and seeking value in purchases. By being mindful of their spending habits, they can control their financial situation and direct their resources towards investments that will generate future returns. Living below their means also provides a safety net in times of economic uncertainty or unexpected financial setbacks. By maintaining a lower level of expenses relative to their income, they have greater financial resilience and are better equipped to weather economic downturns or personal challenges. Warren Buffett, in particular, is known for his modest lifestyle, despite his immense wealth. He still lives in the same house he bought decades ago and drives a relatively modest car. His approach is a testament to the power of living below one's means and focusing on long-term financial goals rather than succumbing to material excess. 2. Emphasizing long-term investments. Emphasizing long-term investments is a key habit of the rich, including Warren Buffett. Instead of being swayed by short-term market fluctuations, wealthy individuals prioritize investments with a long-term perspective. Warren Buffett is widely recognized for his patient approach to investing, which involves seeking out undervalued companies with strong fundamentals and holding onto these investments for extended periods.
Buffett's strategy revolves around identifying companies that he believes are trading below their intrinsic value, based on thorough fundamental analysis. He looks for businesses with durable competitive advantages, stable cash flows, and trustworthy management teams.
By investing in these companies, he aims to benefit from their long-term growth potential. Unlike speculators who engage in frequent buying and selling, Buffett focuses on making sound investment decisions and staying invested for the long haul. He believes that allowing investments to compound over time can yield significant returns. By holding on to his investments, he benefits from both the growth of the companies he invests in and the power of compounding. This patient approach to investing aligns with the philosophy that the stock market tends to reflect the underlying value of businesses over the long term. Buffett's track record of success demonstrates the effectiveness of his long-term investment strategy. By emphasizing long-term investments, the rich aim to minimize the impact of short-term market volatility and noise. They recognize that the key to wealth accumulation lies in selecting quality companies and allowing time for their value to increase. This requires discipline, conviction in investment choices, and the ability to ignore short-term market fluctuations. 3. Continuous learning. Continuous learning is a key aspect emphasized by wealthy individuals like Warren Buffett. They recognize the importance of dedicating time and effort to expanding their knowledge and understanding of various industries, investment strategies, and financial concepts. By staying informed, they can make better informed decisions and adapt to the ever-changing market conditions.
Wealthy individuals understand that the world of finance and investing is dynamic and constantly evolving.
They actively seek opportunities to learn and stay updated with industry trends, market developments, and emerging technologies. This continuous learning process helps them identify new investment avenues, evaluate potential risks, and make informed decisions that align with their long-term financial goals. By expanding their knowledge, wealthy individuals can develop a deeper understanding of different industries and sectors. This enables them to identify investment opportunities that may not be immediately apparent to others. They leverage their expertise to assess the intrinsic value of companies and make well-informed investment decisions.
Moreover, continuous learning enables wealthy individuals to adapt to changing market conditions.
Financial markets are influenced by numerous factors, including economic indicators, geopolitical events, and technological advancements. By staying informed and continuously learning, wealthy individuals can anticipate and respond to these changes effectively. Continuous learning also helps wealthy individuals refine their investment strategies.
They study various investment approaches, explore different asset classes, and analyze historical market trends.
This knowledge allows them to diversify their portfolios intelligently, manage risks effectively, and potentially maximize returns. Furthermore, continuous learning fosters a growth mindset. Wealthy individuals understand that knowledge is a valuable asset that can lead to personal and financial growth. They view learning as an ongoing journey rather than a one-time achievement. This mindset encourages them to seek out new information, explore different perspectives, and challenge their existing beliefs. 4. Building multiple streams of income. Building multiple streams of income is a key strategy employed by the rich to enhance their financial well-being. They recognize the significance of diversifying their income sources as a means to reduce risks and increase earning potential. By investing in various assets like stocks, bonds, real estate, and businesses, they create multiple avenues from which money flows into their pockets. Diversifying income streams offers several advantages. Firstly, it helps to mitigate the risk of relying heavily on a single source of income. If one income stream experiences a downturn or disruption, having other sources of income can provide a safety net and ensure continued financial stability. Additionally, different income streams can have varying levels of profitability and growth potential. By investing in a diverse range of assets, the wealthy increase their chances of generating higher overall returns. Some investments may provide consistent cash flow, while others may offer substantial capital appreciation over time. This combination allows for increased wealth accumulation and a more resilient financial position.
Moreover, building multiple streams of income allows individuals to capitalize on different market opportunities and economic conditions.
Certain assets may perform better during specific market cycles or economic trends, while others may excel during different periods. By having investments across various sectors and industries, the rich can benefit from a broader range of potential opportunities and adapt to changing market dynamics. Creating multiple streams of income requires careful planning, financial literacy, and a long-term perspective. It may involve acquiring knowledge about different asset classes, seeking professional advice, and actively managing investments. The process typically involves assessing risk tolerance, conducting thorough research, and diversifying investments across different assets that align with individual financial goals. 5. Delayed gratification. Delayed gratification is a key trait often linked to wealthy individuals. It involves the willingness to resist immediate pleasures and instead focus on long-term goals. Rather than indulging in instant gratification, financially successful individuals make choices that prioritize their future financial well-being. By delaying immediate gratification, wealthy individuals can invest their resources, both time and money, into endeavors that will yield long-term benefits. They understand that short-term sacrifices can lead to greater financial success down the line. Instead of spending money on unnecessary luxuries, they channel their resources towards investments, savings, and strategic financial decisions. This ability to delay gratification allows them to accumulate wealth gradually and make prudent financial choices. It requires discipline, self-control, and a long-term mindset. By sacrificing immediate pleasures, they create opportunities to build wealth, generate passive income, and secure their financial future. Delayed gratification also aligns with the principles of compound interest and compounding returns. By consistently investing their resources over time, they benefit from the compounding effect, where their investments grow exponentially. This approach can result in significant wealth accumulation and financial success in the long run. 6. Surrounding themselves with like-minded individuals. Surrounding themselves with like-minded individuals is a key habit of successful individuals. They understand the value of building a network of mentors, advisors, and peers who share similar financial goals and values. This network provides them with support, guidance, and opportunities for collaboration and learning. By surrounding themselves with like-minded individuals, successful individuals create an environment that fosters growth and enables them to learn from others' experiences. They can exchange ideas, gain insights, and receive constructive feedback, which helps them make better informed decisions and navigate challenges